Is that QE? Not technically. Does it add liquidity to the market? Absolutely. Well, he could buy probably $50 billion, maybe even as much as $100 billion out of that $200 billion fund of it. But it's a bad signal to the world that we're needing to stabilize our currency. That's just not, I just don't think they're going to want to do that. He's got a huge ego. He wants the stock market up at all-time highs. He wants financial stability, wants the economy roaring.
The tides of global finance are shifting fast, and Bitcoin is at the center of it all. With economic uncertainty mounting, liquidity injections looming, and institutional adoption accelerating, where does Bitcoin go from here? In today's interview, we sit down with macroeconomics expert James Lavish to break down the latest signals from the Fed, the impact of quantitative easing, and whether Bitcoin is poised to skyrocket to $200,000. Will the US government step in as a major player? Could we see an executive order to secure Bitcoin reserves? And what does all of this mean for investors right now? James delivers his expert insights, separating hype from reality. Stick around for an eye-opening discussion that could reshape your outlook on Bitcoin's future. Make sure to hit that like button, subscribe for more in-depth crypto insights, and let's dive in.
Like the outcome of this is QE happens in like relative short order, quite soon.
I mean, you heard what Bostic just said. They just basically said, we're going to stop QT soon.
Mm-hmm.
That's a signal that we need to get ready because we may need to be in the market again at some point here in the near future.
And what kind of form do you think that'll take? Will it be QE like we've seen before? Or because like in 2023, when the regional banks started failing, they did the BTFP program, which I know wasn't technically QE, but it kind of was.
Not QE, yeah.
Yeah. Do you think it will be something similar, or do you think they'll just outright do QE?
Well, it depends on what happens in the market. Is it a market shock? Is it something completely unexpected that causes turmoil in the bond market? If it's that, they're going to come out and just print money and buy.
Mm-hmm.
They're not going to care. They're going to stabilize the market. They will rationalize that we need to stabilize the market. And so that's what we're doing. And so, but if it's a contained crisis, like they were able to create an acronym for, well, of course they would rather do that and call it.
They'd rather hide it.
I mean, they're doing it right now. It's not technically QE, but they have something called a regular treasury buyback program. So they're out there buying treasuries in the open market from buyers who hold these illiquid treasuries. You know, they're older treasuries. They call them off the run. And these are back in the day, the big bond traders, the banks, they would come into their desk and there'd be a big stack of, it was like you ever see dot matrix printers, Danny? You're too young. But
yeah, no, I know what they are though, yeah.
Holes on the side and they just, yeah. Well, they had these huge runs of these printouts of bonds, and they had all the bonds in there, all the treasuries, all the mortgage-backed securities. And they would, if somebody called and said, hey, what's the price of this bond? There was no Bloomberg back then,
Mm-hmm.
you know? So there was no pricing, like there was no dynamic pricing for them. It was all on the phone, and there was no ticker for bonds, right? So at least you had stock tickers since way back when, since the buttonwood tree, right? So, but there was nothing to look at. So they had to look at these papers, and so they'd look at the run and say, oh, this, I'll pay you, 97, 0.5 for this one. Okay. But if they asked for a bond and it was like, well, it's not on the run, I have no idea. It's not liquid enough to even be in this massive stack. Then it's called off the run. That means to be really illiquid. Well, now the treasury's out there buying those bonds that are off the run. They're just not liquid. And so why are they doing that? Well, they're creating liquidity in the market, making it easy for people to move their paper, and they're just replacing it by buying those and then issuing new ones. And so it's basically what's happening. Is that QE? Not technically. Does it add liquidity to the market? Absolutely. If you ask Michael Howell, he'd be like, of course it does. It's absolutely what they're doing. Is it a ton? No, but on the margin, it's adding liquidity, just like BTFP did.
So if this year is going to be like a big year for liquidity, I think Bitcoin, whether it's because of liquidity or not, everyone's expecting a big year for Bitcoin. What do you think will happen this year? Do you think we'll see 200K plus Bitcoin?
Well, I've been saying for a long time that my vision was, I was thinking there would be about $180,000 this fall.
Mm-hmm.
Um, Now a lot of things have happened since then. Yeah, see, here's the global liquidity. This is again Michael's chart and this is staggered. So Bitcoin is actually, I think, 6 to 8 weeks um, backwards here. So it has to catch up. But I think that what happens here, Danny, is that we have a lot of tailwinds that may push that forward.
Mm-hmm.
The 180,000. I still think that we can see it this year. We could easily double, especially with all the tailwinds. Well, what are the tailwinds? The tailwinds are there's a whole host of things that have been happening. You've got the gap accounting change where Bitcoin doesn't have to be held as an impaired asset on companies' books anymore. They can hold it at mark to market, which prevented a lot of companies from buying it. They just didn't want it on their books. The ETFs came out, the strongest launch of ETFs in the history. IBIT, BlackRock's ETF, gathered $50 billion of assets in less than a year.
Insane.
Blows everything away. Make it very simple now for anybody, both any institution and meaning endowments, pension funds, even hedge funds who didn't want to deal with having their keys. It was easy for them to just step out there and buy them. And people who have their IRAs and individuals who want to own Bitcoin but have no idea what to do with the keys and all that. Super simple. It's been a huge boon for Bitcoin.
Mm-hmm.
Then you had options on top of that, which helps drive even more liquidity in there because then you've got sophisticated investors who are using options to hedge their strategy so they can even own more Bitcoin. That's another one. And then you've got, SAB 121 was just finally fully repealed. That bulletin from the SEC that was onerous for banks to own Bitcoin and to deal in Bitcoin. It made it very difficult for them. And it basically threatened them that if they held Bitcoin on their balance sheet, that the SEC would audit them or come down with them because they weren't abiding by these really tight, recommendation. And so, but it was finally repealed fully. That's off so that I think allows companies to start moving into this space. Meaning they're going to make it easy for you to buy Bitcoin right through your Chase or Wells Fargo or Citibank account, and then they're going to offer products around it. They're going to lend around it. They're going to, their collateral products. They're going to be all kinds of stuff. So that's that. And then of course we've got this new administration who's clearly crypto friendly. I mean, the guy launched his own Trump coin and Melania coin. He talks about Bitcoin a lot, as has his family and his cabinet. You've got people around him who, like David Sachs and Bissett, these guys own Bitcoin. Lutnick. So that's all a big deal. And you've got Senator Lummis, who's been driving this bill, the Bitcoin Act. And
has to purse in the SEC.
Reserve. What's that?
And has to purse in the SEC.
And oh yeah, that's right. Purse at the SEC, exactly. But another tailwind is the Bitcoin Act possibility. I don't think it's probability in the next few months. It's got a long way to go. I mean, Senator Lummis from Wyoming she authored the bill. She needs a co-sponsor. She needs to get it through committees and comments and then revisions and negotiations, and it's a gauntlet that they've got to run with that thing. It's going to take a long time. Nothing happens quickly in Congress. Nothing. It's got to get through both branches of Congress and then to the president's desk on something that he's willing to sign. He's likely willing to sign anything they get to him, but we'll see. And I don't see an executive order coming, because if you think about him signing an executive order that would make the U.S. government buy Bitcoin through the Exchange Stabilization Fund, like through the Gold Reserve Act, then he could buy probably $50 billion, maybe even as much as $100 billion out of that $200 billion fund of it. But it's a bad signal to the world that we're needing to stabilize our currency. That's just not, I just don't think they're going to want to do that. Yeah. As much as a lot of Bitcoiners are hoping that will happen, I don't see them acting that way. remember, again, Trump he's got a huge ego. He wants the stock market up at all-time highs. He wants financial stability, wants the economy roaring. And the way to do that is to keep kicking this can down the road, creating liquidity, making money easy, and keep going. And so, so those are all kind of tailwinds for Bitcoin on top of this expansion of liquidity and liquidity getting easy. So, or continuing. It's already been ticking back up. It's just going to continue probably into the end of this year, into next year.